What I'm about to tell you guys in today's video could change absolutely everything for you if you hold any amount of XRP or even other cryptocurrencies. I've been doing a lot of research and I've noticed a pattern which, frankly speaking, I think will shock a lot of you guys and also provide a lot of value. So I'm pretty stoked to start showing you guys exactly what's going on here. And first, I just want to talk about, of course, the last few months here. Ever since XRP hit its peak way back here in July, we have indeed been on an undeniable downtrend. I mean, you can see the peak right here all the way to where we are right now. And yes, we have had some very sharp rebounds after hitting lows every single time, but the general trend has been lower. Now, I'm not saying this to scare you guys or to make you think that something's happening when it's not, but basically, this could have mean that XRP has actually been in a bear market since July of 2025. And if that is indeed true, because we have gone down from our peak of about 365 all the way down to a low of about 182, I guess very briefly going to 120, but kind of discredit that because it wasn't sustained for very long at all. We instantly recovered on that day. But if this is indeed true and we are in a bear market, this actually presents one of the best opportunities I think anybody will ever get in cryptocurrency. Because generally speaking, bear markets never last longer than 12 months in cryptocurrency. I mean, we've looked at the last 3 bear markets in crypto, and they've lasted anywhere from 6 to 12 months every single time. Very rarely do they go any amount over 12 months, and if they do, it's only by a couple of weeks, generally speaking. It basically never happens, is my point. And so, I mean, July to now, we're already many months into this potential bear market, if that is indeed the case. I mean, definitionally, we are in a bear market, but people in crypto seem to have different definitions. But I digress. I want to show you guys the pattern that I noticed, which I think is extremely interesting, and what I think it actually means for the market. If you had consistently been buying XRP after every single time you saw 3 consecutive red daily candles, you would have actually been doing very well. And you actually would have been doing a lot better if you had been buying XRP after every 4 consecutive red candles. Now, there's actually a lot of different examples of this, but one example is if you had bought XRP on the 4th red consecutive daily candle right here on the 2nd of August. You buy XRP right here on the 2nd of August, and not even 5 days later, XRP goes from $2.74 at the low all the way up to $3.33 at the high. And then once again, if you bought XRP after these 4 red consecutive candles, you could have got XRP at 311 at the low, and you could have exited potentially at 333 at the high. And this has been happening actually very consistently. And we've had even examples of this very recently. I mean, right here is a prime example. We had a low right here. We had a high very shortly thereafter. And of course, right here, we had 4 red consecutive candles ending on the 22nd of November, followed by us then hitting a new high, interim high, of course, in the short term of course, 228. So basically, what I'm saying is there's a very strong correlation here between 4 consecutive red days and a rally almost immediately following pretty much every single time. And this does make sense. I mean, generally speaking, a lot of what these institutions are doing is they're trying to liquidate a large part of your guys' positions. And generally speaking, it doesn't take very long for them to do this. They'll be able to do this sometimes in a single day, but generally speaking, the contagion that follows this liquidation event and retail panic selling extends this process a couple of days. And this is precisely what institutions actually rely on. They create the fear, they let retail sell, and then they buy the dip. And this is unfortunately what 90% of retail investors fall for very consistently. And this is why most retail investors in crypto actually get absolutely wrecked in these markets. They are far too emotional. And I want to point something out. I do think there's a very high likelihood that these markets are going to be churning very bullish and we could potentially break through our all-time highs very soon. And I want to explain why that is and what we need to look out for in order to ensure that this is actually something that can happen. The first thing is we want to look at Bitcoin, because Bitcoin does still lead this market in a number of different ways, and everything is still tied to Bitcoin whether we like it or not. If Bitcoin holds above $95,000, which is the 100-week EMA, this is a very strong indication that the bull run is getting ready for its next move forward. But it has to hold above that level for a few weeks. So that's what we need to look for. And Bitcoin is retracing to new hit levels that it hasn't retraced for a while. Most recently, of course, climbing above $91,000 per coin. There's also some really interesting things happening in the housing market, which is very similar to previous recessions and previous market recoveries. And essentially, the US housing market is showing some really strange signs. And yes, this does correlate with XRP, and I need to share this with you guys. Basically, the price of a new single-family home has traded below the price of an existing single-family home for 12 months. New homes are selling for less than existing homes. There's only been a few times in history where this has actually happened. This actually did take place during the 2007 and 2009 preceding this financial crisis that we saw. This happened in what's known as Japan's lost decade, where their housing bubble absolutely collapsed in the 1990s. This also happened in the UK housing market in the early 1990s when they were also going through a recession. In other words, when the U.S. housing market has new single-family homes selling less than existing single-family homes, is a very strong sign that we are indeed in a recession, or we're very close to some form of financial crisis. Now, I want to point out that today is a very much different place than where we were back in the 1990s. And mortgages are not handed out nearly as easily as they were back then, like in the 2008-2007 financial crisis, and of course in the housing bubble that happened in the UK and Japan. But what we do have is an economy that absolutely needs one thing: liquidity. I mean, quantitative tightening happened for such a prolonged period of time that it's becoming super difficult for home sellers and developers to actually sell their properties. And that's why the price of new single-family homes are trading below the price of existing single-family homes. People that already own their home, they're not in any pressure to sell, but the developers are. And so when the developers can't sell at a certain price and they absolutely need that capital to pay off loans they got from the bank, they're going to lower that price. And of course, there is certain people that are over leveraged, and right now they're just trying to cut their losses. And this is exactly like what was happening back in a lot of these financial crises previously. The main difference is there's not going to be a bunch of retail individuals that are defaulting on their loans, at least to the same degree that we saw back in 2007, 2008. And so some people look at this and they actually think this is a really bad thing for the general economy. This is going to affect cryptocurrency. I actually tend to disagree. Because one thing we do know will absolutely start to happen is once we get a few more rate cuts, we're actually going to start to see quantitative easing. The money printer is going to go back online. Liquidity is going to come in full swing. The cost of debt is going to go down at a number of different banks as a result of this. And what this is going to allow is for everything to sort of rebound. And so realistically, the only thing we really need to wait for is for quantitative easing to start and wait for that 3-month period of time. And in the meantime, we can really grab, this pattern recognition that I've had here with the four consecutive red day kind of cycle I've been noticing, and we can just look to continuously accumulate these dips on these consecutive red 4 days here. I mean, this seems like the magic number almost. And I do think that there's a very high likelihood that this pattern is going to continue. And whether or not we continue to trade lower or not, I don't think that really matters in all honesty. As long as we're taking advantage of these movements consistently, I think that we're going to be okay. And so that's precisely what I'm going to be doing inside of my Discord community. And so I want to invite all of you guys to join in so you can see my full track record and you can see that I actually know what I'm talking about. Because I know that anybody can say anything on the internet. It's much easier if you can actually see the proof. And well, all of you guys can join my Discord for free and see my trading history completely. So I want to make sure that you guys all have that opportunity so you can understand that, well, I'm not just talking out of my rear end. So I'll leave a link down below for you guys to join my Discord. I'd really love for you guys to come in there just to be part of the community. And yeah, let's just continue to win this bull run. That's my only goal. Thank you guys for watching today's video. Please don't forget to like and subscribe to my new channel here, and I'll see you guys very soon. Peace out.